Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. Today we're doing a deep dive into 5 compelling stocks that I believe are setting up for a strong performance as we navigate the complexities of mid-October 2025. The market is currently in a delicate balance, weighing persistent inflation against signs of economic moderation. In this environment, it's not about broad bets. It's about surgical stock selection. Our focus is on companies with durable competitive advantages, clear catalysts, and a technical setup that suggests a favorable risk-reward profile right now. So we're going to break down the fundamental thesis and the immediate technical picture for each of these 5 names. If you appreciate this kind of detailed no-hype analysis, do me a favor and hit that thumbs up button. Now let's get straight to our first pick. Our first stock is a titan in the technology space, Microsoft, ticker symbol MSFT. The narrative here has evolved beyond just the initial hype around AI. By now, in late 2025, we are in the monetization phase. The core of my thesis is the accelerating adoption of Microsoft's Copilot across its entire enterprise ecosystem. We're seeing real high-margin revenue being generated from subscriptions within Office 365, Dynamics, and most importantly, Azure AI services. This isn't a future story anymore, it's a present-day driver of earnings acceleration. As we head into its upcoming earnings report, the key metric will be the growth rate of Azure, specifically the portion attributable to AI workloads. I'm looking for confirmation that enterprise clients are not just experimenting, but are deploying AI at scale, which flows directly to Microsoft's bottom line. Technically, Microsoft is currently consolidating after a strong run. The stock is building a solid base right around the $410 level, which aligns with its 50-day moving average. This is a very healthy sign. For me, this area represents a prime zone for accumulation. The resistance to watch is the recent high near $435. A definitive break above that level on strong volume post-earnings could signal the next major leg up. I see Microsoft as a core holding that offers both defensive stability and significant growth from the AI supercycle. Next up, we're moving into the healthcare sector with Eli Lilly, ticker symbol LLY. This is a pure play on one of the most powerful secular trends in medicine, the GLP-1 market for diabetes and weight loss. The story for Lilly is simple and overwhelmingly bullish. Demand for its drugs, Mounjaro and Zepbound, continues to vastly outstrip supply. Every single new manufacturing line that comes online is a direct catalyst for revenue and earnings beats. My research suggests that they are making significant headway in scaling production, and we should see the fruits of that labor reflected in their upcoming Q3 numbers. Beyond GLP-1s, their pipeline in Alzheimer's with donanemab provides a long-term call option that the market may still be underappreciating. From a technical standpoint, Eli Lilly is in a powerful, sustained uptrend. The stock has been finding consistent support along its fast-moving 20-day exponential moving average, which currently sits around $780. This is your immediate support level to watch. For a stock this strong, buying on dips to that moving average has been a winning strategy all year. The next psychological and technical hurdle is the $800 mark. A clean break and close above that level would likely attract a new wave of momentum buyers. The fundamental story here is just too strong to ignore. Our third pick is the undisputed leader in global payments, Visa, ticker symbol V. In an uncertain economy, I want to own best-in-class businesses that act as toll roads on global commerce, and Visa is the ultimate example. The thesis here is built on resilience and the continued secular shift from cash to digital payments. More importantly, the resurgence of cross-border travel is a massive tailwind. These international transactions are significantly higher margin for Visa, and with travel volumes now exceeding pre-pandemic levels in most corridors, this is a powerful earnings driver. Visa's network effect creates an almost insurmountable competitive moat, and its ability to generate immense free cash flow is second to none. Looking at the chart, Visa has been trading in a very clean, defined uptrend channel. The stock recently pulled back to the lower end of this channel, finding strong support right around the $295 level. This presents a textbook entry point from a risk-reward perspective. You have a clear support level to trade against. The upside target is a retest of the top of the channel, which comes in near $310. For investors looking for a high-quality compounder with defensive characteristics and a clear growth catalyst, Visa is a top-tier choice right now. Fourth on our list is an industrial powerhouse that I believe is a brilliant, less obvious way to play the biggest themes of the next decade. Eaton Corporation, ticker symbol ETN. Eaton is the ultimate picks and shovels play on electrification, grid modernization, and the AI data center boom. While everyone is focused on the chip makers, Eaton is providing the critical electrical equipment, the switchgear, the power distribution units, the backup power systems that makes it all possible. The demand from data centers alone is creating a multi-year backlog for their products. This is a secular growth story, not a cyclical one, and it's largely insulated from the whims of the consumer. The technicals for Eaton are incredibly bullish. The stock broke out of a long consolidation pattern a few weeks ago and has successfully retested the breakout level around $330, which has now turned into a firm floor of support. This is exactly what you want to see. It signals that the breakout is confirmed and buyers are in control. From here, I see a clear path towards the $350 level and beyond. Eaton is a way to invest in the AI revolution through the back door, with a company that is seeing massive sustained demand for its essential products. Finally, our fifth pick is Airbnb, ticker symbol ABNB. My thesis here is centered on the continued strength of the experience economy. Consumers, particularly younger demographics, continue to prioritize spending on travel and unique experiences over physical goods. Airbnb is the premier platform for this trend. Its asset-light business model allows it to scale beautifully and generate significant free cash flow. We're also seeing strong growth in non-core areas like long-term stays and Airbnb experiences, which expands their total addressable market. With their Q3 earnings coming up, which will cover the peak summer travel season, expectations are high for a very strong report. Technically, Airbnb has been building a cause for its next move. It has established a very strong zone of support in the $185 area. The stock has tested this level multiple times and it has held firm, which tells me there's a strong base of institutional buyers here. The key resistance to watch is the psychological $200 mark, which also coincides with its prior highs. A strong earnings report could be the catalyst that finally pushes the stock through that level. I like the setup here as a pre-earnings play, buying near a well-defined support level. So that's my full view on 5 compelling stocks for mid-October: Microsoft, Eli Lilly, Visa, Eaton, and Airbnb. Each one offers a unique blend of fundamental strength and a timely technical setup. As always, this is my analysis, not financial advice, so be sure to do your own research. Let me know your thoughts in the comments below. Which of these stocks is on your watch list? Thanks for tuning in.